Last week, two big drug companies announced a major breakthrough in cancer prevention. This exciting news drove the stock in one of the companies, Moderna, from $62 to $174 in one session. That's 177% in a single day. But Moderna wasn't the only company that made that share price surge possible. And I've found two additional little-known companies that are benefiting from the same megatrend that fueled Moderna's big move. This is likely the first time that most investors have even heard of the cancer vaccine and genomic analysis megatrends. But I've been following developments in the industry for the past several years. January 25, I told my followers to buy stock in a company called Guardant Health at around $43 a share. That was back when Wall Street had written off precision oncology almost entirely. That call is up 282% today. $10,000 put in that day is worth over $38,000 today. Now, I'm not telling you that to brag. I'm telling you because I'm seeing a similar setup today. For those of you who are new to my channel, I started my career as a Wall Street analyst, and later I ran a hedge fund during the dot-com boom and bust period. My fund produced exceptional results, but I've always had an independent streak, so I decided to break free from the corporate grind to travel the world and to trade my own money instead. But the years I spent as an analyst on Wall Street taught me one invaluable lesson. You want to focus on the little companies with exciting new products or services before the big money institutions move in, because that's usually where the big money is. When a little company comes up with a revolutionary new product, it's often too small for the big funds to pay attention to. It simply doesn't move their needle fund-wise, even if the stock doubles or triples. But as the little company grows to a certain size, it attracts fund managers who start to build positions. And as they build their positions, they drive the little stock higher. I've made huge sums of money over the past several decades by investing in small cap stocks before the big money fund managers move in. Today, I'm going to bring you into my world as a former hedge fund manager and describe my latest small cap investing thesis that I believe will soon start to attract these big money investors. So settle in and pay close attention to what I have to say for the next 7 minutes or so, because this could be one of the biggest money-making stock market opportunities for the next several years. The entire personalized cancer vaccine market today is about $246 million. That's it. But the testing layer beneath it is already a $3 billion market, and it's headed to more than $7 billion by 2033. This is a classic picks and shovels scenario, and the picks are worth more than the gold itself. Here's what I'm going to do today. I'm going to talk about three companies which are all doing the same job. That's reading the tumor. The first stock is up more than 50% since just last Tuesday. And here's the interesting thing. The reason almost every news outlet gave you for the move is wrong. I'll show you the filing that proves it. The second stock hit a 52-week high in a week when the company said nothing at all. No press release, no announcement, and not one story that named the company in the financial news. That's the stock that I'm most interested in. And with the third stock, the headlines were flat out wrong. So I'll tell you what my favorite company of these three actually does, and talk about how I would trade it before it's too late or for the wrong reasons. But before I get to that, there's one idea I need you to hold on to for a moment. It starts with the gold rush. Everybody remembers the gold prospectors, but no one seems to remember the assayer. The assayer was the man you brought your nugget to. He ran the test. He told you whether what you were holding on to was gold or if it was just a worthless rock. Interesting thing is, he got paid either way, even if your gold was fake. Keep him in the back of your mind, because I'm going to be coming back to him in just a moment. Now, I've built a simple process to map out the cancer drug development ecosystem. It's just a way to help me make sense of who actually collects the money in the drug development process. There's 3 tiers to the ecosystem. The company that already got paid, the one that's getting paid quietly, and the one that hasn't been paid yet. We start at the top with a company called Tempus AI. This company got paid faster than anybody, but the stock is already well known on Wall Street. Tempus is up almost 40% since Moderna news broke just last week. And here's why. Back in July, Tempus agreed to buy a company called Personalis for about $1.5 billion. Personalis does the genomic sequencing for both Moderna and Merck. Now here's what almost everyone covering this got wrong. Personalis sells 2 different things. One is a tissue test that reads your tumor and finds the mutations you build the vaccine from. The other is a blood test that checks whether the cancer is coming back or not. The tissue test is the one in the Merck and Moderna program. The blood test, however, is why Tempus bought them. I read the original Personalis acquisition release myself. It never even mentions Merck, Moderna, or even the word vaccine. So the stock repriced almost 40% higher on a business line management never pitched. But the real evidence was sitting in a filing nobody reads. And it's better than the story everybody's repeating. Open the Personalis quarterly filing from 3 weeks ago. Merck is 37% of the revenue. Moderna, another 12%. Together, that's half of the company. And Merck's spending on Personalis services went from almost $2 million to a little over $8 million in the last 12 months. That's 4.5 times in 1 year processing clinical trial samples. You don't need a press release to know what's inside this program. All I needed was to read the 10Q, which brings us to the stock that every single small cap investor should be aware of right now. It's my favorite of the 3. It's SOPHiA GENETICS. Last Tuesday, SOPHiA jumped 9% on triple its normal trading volume, and it closed the week at a 52-week high. SOPHiA didn't even put out a single press release that week. It wasn't named in any of the news coverage. The market simply worked out that somebody has to read other types of tumors besides melanoma. And they started looking for who? SOPHiA isn't a lab. It doesn't run tests. It builds the software that hospitals use to turn raw genetic data into an actual clinical answer. Think of it as an operating system for precision medicine, not the scientists and lab coats doing the testing. Now here's what most people miss about this one. While everyone was pricing the story this week, SOPHiA was already producing the revenue. Second quarter revenue hit $23 million, up 27%. That's an acceleration from 22% the quarter before. U.S. revenue was up 64%. Net dollar retention climbed to 117. That means that hospitals already on their program, their platform, are spending 17% more than they did a year ago. They also raised their guidance for future growth. 7 of the 10 top cancer centers on Earth run on SOPHiA's platform. And in August, they signed their first ever companion diagnostic deal with pharmaceutical giant AstraZeneca. Now, this story isn't all sunshine and rainbows. They're still losing money. And the company I recommended early last year, Guardant, is suing them. So anyone think about buying the stock should first consider these operational and competitive risks. But now I want to tell you about the last stock on my list today. And with this stock, the headlines, they simply have it wrong. Biodesix does not detect cancer coming back. That product doesn't exist yet. What it does is tell you whether a spot on your CT scan is likely cancer before any doctor's diagnosis. The company offers 5 blood tests. Its revenue was up 34% at an 82% gross margin. So why is this on my list of favorites? Because of where the program is going. 3 of the 4 current late-stage vaccine trials are in lung cancer. 2,400 patients are in these trials, more than double the melanoma trial that just produced the promising results that drove Moderna stock. But those 4 lung cancer trials don't read out until 2029 at the earliest. So let me come back to the assayer analogy I told you about earlier. Remember that an assayer is someone who gets paid in a gold rush, even if the prospectors just find a bunch of rocks. All 3 of these companies in this report surged higher in the past week. But here's the question I'm sure you're asking. What stocks do I buy now? Most of them already run. Well, if you were a subscriber of my Equity Empire Small Cap Recommendation Service, you would have already been well positioned. Because on June 30th, I told my active trader subscribers to buy Sophia Genetics at a little under $6 a share. That was 7 weeks before Merck and Moderna announced anything at all. It closed Friday at $8.65. That's up 45% from where I called it. So I'm not going to stand here and tell you to chase my own alert. That's how people get hurt. Here's what actually changed. I gave my subscribers a $12 price target, and that hasn't changed, at least for the moment. From $8.65 to the target, that's still 39% upside. In June, when I recommended it, however, that was closer to a double. That's the type of upside I like to find for my subscribers. If I was jumping in now and I had $100 to invest going into this theme today, $60 goes to Sophia, but no higher than $6.50 per share. If I wasn't already in the stock below $6.50, I'd rather miss it than chase it. Now, I'm not betting on which drug company produces the next big cancer drug. I'm focused on the little companies that use AI to help the big drug companies increase their probabilities of achieving big new drug breakthroughs. These companies get paid either way. If you want to see my latest stock results on these rapidly developing megatrends, contact me using the link in the description below, and I'll reach out to you. Because the cancer vaccine finally produced positive results. And this news alone drove Moderna shares almost 200% higher. The question to ask now is which stocks are going to run next.